Welcome back to the Neuro Finance Masterclass. You know, in the world of finance, there's a tool that's so powerful, it's often described as a weapon. It promises these massive, life-changing returns, but frankly, it's responsible for destroying more accounts than just about anything else. So today, we are pulling back the curtain on the leverage trap.
And look, that's not just some dramatic line. It is a stone-cold description of what happens every single day in the world of leverage and margin trading. This is the place where the dream of getting rich quick slams into the brutal reality of being completely wiped out. We're not talking about just losing money. We're talking about it being vaporized.
So try to imagine the entire market as this giant casino. Smart investing, the way we do it, is like playing a careful strategic game out on the main floor. But leverage trading, that's the high-stakes, velvet rope VIP room in the back. And you have to understand, it is designed with one single purpose: to take all of your money.
To really get why it's so dangerous, you've got to understand the rules of the game. Because what we're talking about here isn't just a different strategy, it is a fundamentally different game, one where the odds are deliberately stacked against you from the very beginning.
Okay, this distinction right here is absolutely crucial. With spot investing, what we believe in, you actually own the asset. You buy the stock, you buy the crypto. It's yours. If the price drops, sure, it doesn't feel great, but you still hold the thing. You can wait for it to recover. But with futures trading, you own nothing. Zero. You are simply placing a bet on which way the price will move. It's not investing. It's pure, unadulterated gambling.
So inside this gambling den of futures trading, if you think an asset's price is going to rise, you go long. It's the optimistic bet, right? You're wagering that things are about to look up.
And of course, there's the other side of that coin. If you think an asset is about to completely crash and burn, you can go short. You're literally betting on failure. But either way, long or short, you're not an owner. You're just a gambler at the mercy of price swings.
Now, betting long or short is already risky enough, right? But what makes it catastrophically dangerous is when they introduce this financial poison into the mix. This poison is called leverage, and it's how a little bit of borrowed money becomes a deadly, inescapable trap.
So what is leverage? It's actually really simple. It's just borrowing money directly from the exchange, the casino, to make your bet massively bigger than it should be. And believe me, the exchange is more than happy to lend it to you because they know the game is rigged in their favor.
Let's look at the math, because this is where it gets real. Let's say you have $1,000 of your own money, and you use what's called 10x leverage. Instantly, the exchange lends you $9,000. So now your small $1,000 stake is controlling a massive $10,000 position. It feels incredibly powerful, and that right there, that's the bait.
And here is the trap, laid out in plain sight. On the left, that's the dream they sell you. Your $10,000 position moves up by just 10%, and boom, you've made $1,000. On your original $1,000, that's a 100% gain. You've doubled your money. But math is ruthless, and it's perfectly symmetric. On the right is the cold, hard reality. If that same position moves down 10%, you lose $1,000. That was all of your original money. It's not a loss, it's a total wipeout. You are gone.
And this is the psychological hook. You see what happens, right? Amateurs see that potential for 100% gain, and they just become completely intoxicated by greed. They totally ignore the fact that the potential for 100% loss is just as real, and in this game, far, far more likely.
So what happens when your bet goes wrong? Well, this brings us to the exchange's brutal automated safety net. It's called the liquidation engine, and it is the mechanism that ensures one thing and one thing only. The house always wins. Yeah, think about that for a second. In our example, you only put in $1,000, but you're playing with $10,000. A 10% drop wipes out your $1,000. But what happens if it drops 11%? The exchange isn't about to lose its money on your bad bet. No way.
The answer is a word you never, ever want to hear: liquidation. And the definition is precise and it's chilling. It is an automated, forceful seizure and sale of your assets. There's no phone call, there's no warning, there's no chance to fix it. A computer algorithm simply takes control and dumps your position to cover the house's loan.
The reality of this process is just cold and mechanical. It's an impersonal algorithm that runs 24/7 with one unbreakable rule. The exchange never, ever loses. Your position is sold instantly. Your loss is locked in, and your money is gone, used to pay back the house. Billions with a B, billions of dollars are vaporized this way every single year.
So,
After all that chaos, after the liquidation engine does its job, this is what's left in your account. Zero. Your entire investment just gone in a matter of seconds. All of it.
All right, now that you understand the trap, let's talk about how to make damn sure you never fall into it. Protecting your wealth is everything, which means we need to take decisive, immediate action to remove this danger completely.
So your single cognitive task for today is simple, and it is absolutely non-negotiable. You have to protect your machine. Protect your financial future from the siren song of the casino's VIP room.
And here's exactly how you're going to do it. And I mean today. This is not a suggestion. It is a strict rule of our system. Open whatever exchange app you use, crypto, stocks, doesn't matter. Go into your account settings. Find the option for margin trading, or maybe it's called leverage or futures, and turn it off. Disable it. Remove the temptation forever.
Let's end on this, because it's the core of our philosophy. Our approach, the Neuro Finance system, strictly and unequivocally forbids the use of leverage. Why? Because we aren't gamblers. We are not adrenaline junkies looking for a quick thrill. We are architects of wealth, building patiently, deliberately, on the solid foundation of ownership, not on the shaky, treacherous ground of borrowed money. Protect your capital.